Hey guys, Mike here. So, boy, what a roller coaster day on Friday, and I appreciate all your comments on Thursday's video. I did respond back to a few of the viewers there, and I really appreciate it. I enjoy, especially talking to people that disagree and stuff. It makes for a good debate, and that's what it's all about. Now, I will say this: you guys asked some really good questions this week, and there was quite a few of them. But the first one about 3 stocks to buy. All right, and there's a certain timeline. And there's actually a trick to this question. There's 2 tricks to this question. One of the viewers asked, and so I'll show it to you, but I want to do that one first because I want to hear your answers and then be able to research the stocks to bring to the public. Because one thing I've learned, there are stocks out there we have never heard of that absolutely crush it on a consistent basis. I'm telling you, it's amazing when you run across these. You're like, really? Never would have guessed that one. And so that's why I want to do that one. But again, you guys have a whole bunch in here, so I'm gonna jump right in and get to it. So hang with me to the end. But the first one comes from Dr. Marcus. He's always got some good questions. And it says, just for fun, if you had to choose 3 stocks excluding ETFs to buy today at current prices and then get stuck on desert island for 10 years that would not make you nervous or anxious and feel comfortable to check on them 10 years later. And boy, is this a tricky question, because here we are on the verge of, does anybody not think the market's going to crash in the next 12 months, honestly? And so that kind of sucks. And what I'm going to do, I'm going to edit the question. I'm going to take that part out for you. I want you to pretend there's a market crash today, okay? What 3 investments would you put it in as far as stocks? And plus, you can't do ETFs, so you can't do SPY, QQQ, TLT, or nothing like that. So that kind of sucks too. But the other one is, remember, he's saying 10 years. You see how quickly these crashes are coming, right? They're much more, way less time in between these crashes now, okay? So you're going to go through at least minimum of 2, if not more, from here on out probably over the next 10 years. The other one is, a lot of people just go straight to the Mag 7, but remember, I've showed you, every 10 years it changes. You go back 10 years ago, that was not the Mag 7 or even the top 10 stocks. You go back 408, right? Top 10 stocks were totally different. All right, so you're not going to see the same Mag 7 10 years from now. It's just not going to happen most likely, or even top 10. Some will move up, some will fall out, some new ones will come in. That's how it works, okay? So, I put some thought on this, and that's why I changed the question to, if there was a market crash today, which one would you buy? And then you can go to the island. You can't see it for 10 years. Here's what I'm going with. I'm going with addiction. 1, I'm going with Meta. Why am I going with Meta? Because remember, we're entering the AI phase, right? I believe Meta can use AI because I don't even think Meta even needs people. Honestly, I believe they can have, because we're talking about social media and the other companies they have, but they can use it to get rid of people and cut labor costs. Let's be real about that, right? And so they can do that. 2, people are addicted to social media. I don't even use Facebook, so I don't even have to skin the game. So this ain't about liking companies, by the way. All right. And so I think that can happen. So I'll pick them. And also, by the way, they don't have to worry about stuff like Apple and all them have to worry about. They're not producing anything in a factory and stuff, right? So I don't have to worry about, oh my God, there are tariffs being put on, blah, blah, blah. And so that's why I go with them. The other addiction is going to be streaming. I would go with Netflix. They got to do a stock split first. But if it's in a crash, they got a huge discount on it. That's cool, because I think they would do a stock split at some point in time anyway. But the other thing is, people are addicted to streaming. It don't matter if it's a recession or not. They're going to stream. Okay, they're going to watch their TV. It's just the way it is, and they're not going to use cable. So I would go with them. Plus, I don't know, as AI comes out, how they create their movies and stuff is different now. Could help them cut costs, all that fun stuff. 3, I would go with the Guggenheimer fund because it pays a high dividend. That kind of balance things out. If I did have a 4th, by the way, just because it's going to be 10 years and they can't see it and we're going through multiple crashes, I'll put some kind of bond ETF in there. But again, can't do that because I only got 3. So please let me know your 3, and I'll start researching them and make them serious. Don't go with some crazy one ain't going to do any good, a penny stock or something like that. So, and I'll try to bring it to you guys and say, well, here's what everybody came up with. I might even do a whole video on it, to be honest with you, if it's enough comments and it actually makes sense to do. And let me know if you want me to do that. So just so you have an idea. All right, next question here says, another Saturday tidbit on rotation. What are the biggest factors, in your opinion, that drive rotation to happen in the first place? And is there any clarity or consistency on what drives money to the next sector? And super grateful for the insights on the topic. I feel it will make my trading ventures far, far more successfully consistent. And truthfully, there's many things, right, that cause rotation. One is, you're seeing it now, this growth scare, right? We got the GDP numbers out from Atlanta yesterday, disastrous, right? So what are people doing? You can clearly see it, which I'll get into in another question here in a minute. Is XLV is going up, XLP, Staples is going up, XLU usually would go up, but the problem is it ran up so much on the data center stuff, I don't even know if that's a safe haven. But when there's a growth scare, people go to safe havens, TLT, bonds, right? That's another one people rotate into. When else do they rotate? when all of a sudden they feel that everything's going to start to turn, right? Even though the economy's getting worse, they feel like, the economy's going to start turning, it's going to start bottoming out. They start going more risky stuff, right? Into the stuff that's really going to make them a lot of money, and they can get bigger bang for their buck. So there's different things and different factors that come into play on that. And then another question that's coming up here in a minute about how to spot rotation. So I will go into that one as well. So hopefully that helps out right there. And here's that question I told you about. What is the easiest / best way to identify stocks that big money is rotating into? Obviously, dark pools can help, but is there a tracker or similar in TradingView somewhere that can help us follow these rotations in real time instead of waiting on a week or something like that? Well, this is one reason I actually put this section in the morning news brief, which continues to grow, and it's top performing daily sectors yesterday, right? And you'll see a trend. Like I think those cruise stocks for like 3 straight days were doing it, staples and everything else. So at least puts it on your radar to look it up. But the easiest thing I see to do is just create these sheets right here, right here, where you come down and you look at market shifts, right? And you track this stuff and pull up on the chart and you go, look, XLP is going up. That's rotation, right? XLU, which normally would be rotated in, like I said, ran up on AI data centers. That one's not so much. XLF is holding up, which lets me know that's why this ain't an overall market sell-off right now. It's just a tech wreck more than anything else. Jets, nope, not happening. But look right here. Woo! Big rotation. And you'll have trend lines on these, and you'll see one in a minute here that tells you if there's breaking out and everything. XLV, you can clearly see there's a trend line. Boom, breakout. Here we go, rotation. And that ain't us. That's big money, right? And you just go down and do that. The other one is compare them to the SPY to see if they're actually outperforming the SPY, and are they worth even getting into, right? Because if they're not, you just buy the SPY ETF instead of buying these and everything. But again, you see everything is divided by the SPY, and you start just rotating in there or look, and you just start looking at it and you go, yep, XLP is outperforming the SPY, XLB is outperforming the SPY, XHB, nope, not happening, TLT is outperforming the SPY, and you just continue to go down, right, and do it that way. So, just let me know. Again, if there's another way you like to do it, maybe there's some kind of indicator I'm just unaware of, and I'd be more than happy to learn about it. So that's how I like to do it, though. Now, next one here says, can you please say why ANF and DEC are down? ANF is looking pretty cheap now. I mean, honestly, especially when it comes to, I don't know anything on either one of these stocks. I know that the charts once I looked at them for you, but ANF is retail, right? And when I look at the ANF chart, man, boy, what's the first thing you think I worry about when I look at this chart? Just look at it. It's a daily chart. Where in the world is the support? I mean, seriously, look at that. That goes back to 2023. Where is the next support? You really have to scroll back and say, okay, hold on a second. We got to go way back in front. I'll show you in just a minute where we got to go. But seriously, that's not good. I mean, look at that run up, because it did such a huge run up so fast. If I remember correctly, this is one of those low flow, highly squeezed short stocks and all that fun stuff. And it just ran up. And so when you look in here, you go, well, way below the 200, there's a 200 weekly, which could always act as a magnet. And when you get below that, normally you get a huge bounce. But again, we start adding in, oh, look at that. It's at the 100 weekly moving average. Okay, so that's where it's at right now. If that breaks, and obviously your 200 weekly could come in handy right there. But when you start looking for support, you got to scroll all the way back to like 2008. Look at this. That's crazy, right? I mean, and we'll put this on here, but that's what you're looking at. Was resistance. You're hoping to turn to support, I should say. And then the next one's down there at 2011. So you're hoping to turn that into support, but that's, not good. So you're hoping to bounce at the 100, but there's not really a whole lot of support going on there. So hopefully that helps out, where it's going. But again, it's not doing well. A lot of these stocks are beat down, like Walmart and Costco and all that. They were the ones running up. Everybody else is getting hammered. Then DEC here, you look at this one. At least it does have some support. It's at support right now. Like it needs to bounce. If it don't bounce, you can clearly see where the other supports are at, right? And then it says 100 weekly moving average. So this one needs to bounce. But if the overall market continues to sell down, well, not going to be very good. Okay. And so, yeah, you can see the supports down there. And those are actually real supports where it's bounced before, not like ANF where you're literally trying to turn what was resistance into supports. Okay. So, yeah, I mean, hopefully that works out for you. We'll see what's going on. But, these stocks are, like many others, are in the doghouse. I don't know if he's traded on the Russell or not, but if they do, that kind of explains a lot more as well. Now, looking at the next one here, it says, if it is oversold on a 1 minute or 2 hour chart, unless there's a bomb, why the 1 minute and 2 hour? What do those have in common? What are your RSI settings to determine oversold? Maybe I didn't go back and look at the video. Maybe I misspoke, but I meant 1 minute all the way through the 2 hour. Like all of them were oversold. Like this right here is the 1 minute. And then we go on the next one. This is the 5 minute oversold. This is the 1 hour right here, that's oversold, as you can see. Then you go on to the 2 hour, the 2 hours oversold. So I didn't mean the 1 minute and the 2 hour. I meant to say, if I did not, the 1 minute through the 2 hour, okay? And then normal happens is you get a bounce. And so here's the futures. You can see what they did, ran us up overnight, gapped us up in the morning, and then of course sold us off. And so again, that's what I'm talking about. Does it always have to happen that way? No, but most of the time when you're oversold on all of those lower time frames, you're going to get some kind of dead cat bounce, pop, whatever you want to call it, oversold bounce, many things like that. So hopefully that helps out. I don't know if I misspoke in that video or not, but if I did, hopefully that corrects that. Now, next one here says, I only mess with the VIX now, UVIX, when the VIX is at 15, just doesn't seem to go much lower. What other security can you say is almost guaranteed not to tank and will definitely move up from there? Much less manipulation is safer than anything I've ever seen as long as you buy when the VIX is at 15. I know there is time decay on ETF, but the VIX moves pretty much every month, so the decay isn't killer. Am I crazy for thinking that at 15, the VIX only has one direction? It can make a substantial move. I can't find an ETF or move. I don't know of an ETF or move either, but you're not crazy right now. Right now, you can clearly see when it gets to like 14.82, it bounces, and that volatility is not going away anytime soon, I don't believe. And you can see around 22.42, it tends to sell back down. So it goes in both directions, obviously. But when you start scrolling back, you can see this changes. Every year to year, this is going to change. Okay, you'll have your lows and highs and have to set them differently. Like right there, 2024, what do you see right there? Don't see 15, that's for sure. It's like more like 11.83, it kept bouncing. And it was barely getting up to that 22 mark. Okay, so around 11, 12 is actually pretty norm. And you go over here from 2021, and it was a lot higher, right? Again, you were going from your 15 to your way higher, like 25, 26, go back even more. So this changes. So eventually this will change. It will start dropping through 15 once things start settling down. I just don't see that happening anytime soon. And then you might even start going higher from here. So we'll see. Another one is divide VIX by VIX 3 month. Again, it comes down that little shaded area. Most likely going to bounce from there, but I like how it points out the top, like the shade. And once you get hit in that area, and this is a daily chart, it usually comes down pretty fast. So just another one I wanted to share with you on that. Next one here says, Mike, longtime viewer, is this first time showing the bond move? You said in the video it recently popped. What is the significant move for this chart? And if you look over here, honestly, you can tell me. I mean, when you look at this, this is not a big pop, right? It just isn't. That's a big pop. That's a really big pop. And so, again, we dropped by 8% on that one. But it's not even just the pop of the day. It's the move. You see 2022 crash right there? Look how much this moved up right from right here. Look at that move. Big move. A lot of bond volatility. And the market basically crashed, right? And so it's not just a one-day move. It's an overall move. And then how high does it stay? That's the other thing you got to think about, okay? And you see when it started to come down a lot, market started to rally, all that fun stuff. And so you can kind of go back and look because, I mean, again, you start going back on a weekly on this thing and you can see how high it really can get during a real crash, which you'll get to see. But right, and you also see how it just kind of keeps trailing down. That's normal, and it does take time. So is it going to keep moving down, like to get back to those normal levels? That's what we got to find out. If we have a market crash, that's not going to be the case, right? But that's 08 right there. And you see how it just kept settling down, going to a new low, and then those short-term pops, causes volatility in the market and all that fun stuff. But when you look at it overall, you haven't seen a big pop right now. And if we start getting back up to the other shaded box or above it, then the market's going to be under pressure for sure because it's getting kind of spooked by what's going on in the bond market. And also, if we get way up there, you'll see bond spreads start to blow out, and that really freaks the market out. So they all kind of go in unison, not just the volatility, but the bond spreads, HYG, junk bonds, all that fun stuff. So that's what you're looking for. Now, next one here says, simple question for Saturday, response welcome, opinion based. Do you see value having a chance to outperform growth? BUG divided by BTV. Sure, maybe on a bad year for the overall market, but I'm finding it hard to see these companies outperforming those with the long-term horizons like 10 to 20 years. Would be interesting to hear your thoughts. Let's just go look at it. Might surprise you a little bit, but VUG is Vanguard Growth ETF he's talking about. BTV is Vanguard Value ETF. So we just take those, we're going to divide them by each other, and you'll kind of get an idea and say, well, look, no shocker here. Growth outperforms value. All right, and you see some big spikes, and then when you see it dropping, it's usually in what? It's going to be in either a recession or a major market drop because everybody's bailing out of tech and growth and everything and heading for value because they want to put the money somewhere and just don't want it dead. And again, what we'll do here is we'll just pull these up and look at them separately, and you can see That's 2022. Bam, big move down, 37%. Value, on the other hand, which money rotated into, because it had to be somewhere. I'm sure it's paid a dividend, only down 3.75%, right? So not high beta stuff going on there. And then, of course, when it takes off, obviously the outperformer is going to be the growth. But what might surprise you when we kind of scroll back and we'll look at this, whatever, but again, you can see these move downs during these crashes and everything. Growth is always going to come down harder, but it's also now going to go up higher, and I'll tell you why in just a second. But when we scroll back and look, before 08, look at that. Which one was outperforming then? From 04 up to the crash, it was actually VTV, value versus growth. So why do you think that was there versus now? About 2015 really is when it changed. 2018, somewhere there, especially after 2020 really is when it really changed. And it's because of the Mag 7. It's that simple. If you look over here, it's handicapped. Look at this right here. Over 50% of VUG is the Mag 7. And what they do after 2020, it's where all the money went, baby. And you just kept going into it. So it left growth behind. So if that changes, obviously growth can perform better. If we go into a bad time where the market is like one of these 10-year time frame, one of these 10-year time frames where the market is just almost sideways, value could do really well. So, keep an eye on that, because people be looking for that dividend and trying to play it safe because they don't know what's going on in the market. So it could happen again. We'll see. So anyway, I hope you guys got something out of it. Please hit that like, subscribe button on your way out. I look forward to all your responses. Thank you for all the questions. Thank you about signing up for the membership. Let's know McDonald's combo. And I will see you guys tomorrow to set up the week.